Good afternoon. Welcome to Chicago Future Finance. I'm Oliver Renick. We are live from Cboe. Stocks under some pressure here. As I was just saying, firing off a little tick-tock. We got multi-platform going on. If you're tuning in from Benzinga on YouTube, thanks. Big shout out to Brad Olson and Aaron Thomas for hooking that feed up. We're also, of course, on X. Noel Smith is going to be joining me here at the top of the show to talk some volatility in a moment. But first, a little teaser as we're getting pretty close. If you're in New York next week on the 10th, great panel. Matt Cashman, Anthony Rousseau, Brent Kochuba joining me for the Benzinga FinTech Conference. That's in New York next Monday, right? The 10th, yeah, because I got to come back into town here in Chicago on Tuesday for the show. So Monday, if you're in New York, come check us out. For the show today, here's who's coming up. We've got the squad. Pete on the Najarian side today, as we're going to be looking at event contracts, dealing with some of the political stuff and the shutdown that's still going on. That's a pretty big deal at this point. We've got Charlie Moon filling in for Scott Bauer at the closing bell. We were talking tech and crypto yesterday. Crypto's under pressure. So in addition to Noel Smith talking volatility, we're going to talk crypto volatility with Kevin Kelly, who's joining us from Kelly Intelligence, the portfolio manager for a suite of crypto income funds, as our Cboe ETP products, more than just funds, but in this case it's ETFs for our exchange traded profile later on in the show. So with markets down, let's run through a few of the important charts. For me, that basically means semiconductors. That's number one. The fact that they're breaking down a little bit here is a pretty big deal. So that's, I think, kind of the biggest thing right off the bat, which is this group has to stay strong. And if it doesn't, which it's not today, then you do have issues. Though SMH down 1.5%, that's not too bad. I think the chart still, as I'm looking at it here on Trader Oasis, SMH, if it stays above 350, then you basically have found support, I think, at a key level. Note all the trading that happened down here. If you were following along with some of the stuff I was putting out just on my own socials the last week when we were off the show, my main point was that the SMH chart looked like an ascending triangle, basically, where you had resistance right there at the SMH for 350, but you had the uptrend coming up into it, making that triangle pop. It jumps out, and then you get the gap up, basically, from 350 all the way to 370. So with semiconductors pulling back, in my mind, this is still not a big deal. If you drop for the SMH below 350, maybe it does become a big deal. Looking at NVIDIA, of course, very important ahead of their earnings ahead. As Brent Kochuba has told us several times here this week, there's a big volatility premium in the VIX futures curve that's tied to NVIDIA's earnings. That's a big deal. That tells you a lot rests on this. So NVIDIA down 2.5%, I think is quite notable. Check out AMD as well after the earnings there, down 6%. I don't like that. And by the way, my risk radar generally has been very positive, but it changed this week as I put stocks onto yellow. So just glancing at that real quick. The fact that you've got stocks yellow now alongside bonds yellow, dollar yellow, there's quite a bit of uncertainty lingering in, I think, some of the macro stuff. But the Bitcoin light being a pure red is definitely a big deal. That, I think, is important because it basically tells you that crypto is the softest right now. MicroStrategy also quite weak. If you look at MSTR, the fact that MSTR is down another 6%, I mean, this is like the bubble-icious stuff in the market in my mind, no doubt about it. That's the whole idea behind the short MicroStrategy, long Bitcoin trade. Obviously, the long side of the Bitcoin, of that ARB trade or that spread trade between MicroStrategy and Bitcoin, BTC down 2.5%, right? So that's the idea, is it gets hit less. MicroStrategy is the higher beta version of Bitcoin at this point. So that trade has worked really well on the year. My question for the risk radar is basically, are we going to get stocks to follow crypto? Is crypto the indicator for the market as a barometer of risk still, because some of that shifted a little bit. Remember, Bitcoin was not doing quite as good of a job as signaling stock moves over the last several months. Part of that maybe because of the embrace by big government, essentially, for the crypto market. But ultimately, Bitcoin stayed within that bearish divergence. So the red light on Bitcoin, is that going to translate into the red light on stocks? I don't think so until something bigger happens. I think Noel Smith has got ideas on volatility, which is, I think, maybe a good time to bring him in. Because generally, you've, I think, got a VIX that's for the most part pretty calm. And that, I think, is 18 basically. That's not bad for volatility for VIX at this point. The question, I think, is basically, do semis break down, number one? And then do you get some kind of macro move, let's say maybe in the dollar or something like that? But that hasn't happened yet. So that, I think, is telling you also that there's just sort of a general uncertainty maybe lingering around the macro situation. But overall, that hasn't really developed yet. So that's why you've got yellow on my risk radar across all the macros. Here we go. I got you. Here he comes, Noel Smith. What's up? Can you hear me, sir?
I sure can, yes.
Beautiful, my man. Okay. So Noel, tell me, VIX yesterday 17, basically VIX today 20. If we start there, what does that tell you about how volatility is responding to this?
I don't think vol is really going that crazy, as much as I'd love to give some super clever insights as to why, the market is down and the VIX is up a little bit. It's not that big of a deal. You've got market down 70 bips right now, which is whatever, it's within range. And we're still north of 6,700. So I don't see any real reason to panic. In terms of gamma, we're pretty close to a neutral regime. So it is important to kind of stay alert and see if we do draw down and VIX pops more, it could get a lot worse a lot faster.
Okay. Now, when you think about worse, faster, what do you think will be the indicators for that? Can you get the answers from volatility metrics, or is VIX always just going to be moving direct with S&P at this point? How do we kind of sleuth around the corners here, Noel, to maybe try and get some insights on if there's any bias in the options market?
Well, that's more of a philosophical conversation, but I think that vol and VIX are the best indicators there are, really, in terms of the future predictions from the aggregate investing community for what's going to happen, because vol is one of the few products or few assets out there that is a forward-looking thing. So if you're looking to the investment community or the speculation community for a tell as to what's going to happen, it usually manifests in volatility, and everybody on that floor behind you already understands that, which is people that are putting their money where their mouth is, that's where they look. So that's why I look at vol, and that's why I've been looking at vol for 25 plus years.
Yeah. Okay, so then is it stock specific? Is it broad market? How much of this can be attributed to the kind of pullback in AMD semiconductors as a major force for the market? Because for me, they do take precedent over a lot of the macro, bizarreness, politically, shutdown wise, all that type of stuff. Obviously, Mamdani took New York as well. Some argue that might have market impact. But for me, it's like, just go with the numbers, which is earnings. That's what drives stocks, and the earnings come from tech. So does that show up in tech volatility in some way?
Of course. NVIDIA earnings on the 19th are a really big deal. As you mentioned earlier, you can see that even in the VIX curve. But everybody understands there's this reflexive nature, circular funding, circular financing between all this AI stuff. And it kind of reminds me of the tech bubble, where a lot of people knew that it was very dangerous and speculative. But there's really two things you can do. You can either participate, dance when the music is going, or don't, and sit there and watch everybody around you make a bunch of money while you're too clever to fall for it, so to speak. So the market is in a situation where they're kind of damned if they do, damned if they don't. If they don't, they're going to underperform, and if they do, they're going to get clipped at some time, whether that be today or 6 months from now, and nobody knows. But of course it's dangerous, and of course it's going to be violent when it finally breaks, because of the circular nature of it. But the guessing game and the real alpha is going to be in timing that. And again, I would look to the vol markets to predict that, because it's very rare that you see a really large move happen from a very low steady state of volatility. Usually the market is very clever at figuring out some sort of a catalyst that will give you the move that you're looking for in a down move.
Yeah. The VIX futures curve we were looking at basically has, if you kind of look out the expiry for options, there's so much coagulation in kind of like mid-November to late November. Nvidia earnings being in there is a major kind of kink in the vol curve going forward. Should we expect that to kind of be our testing point, Noel? I mean, how do you kind of look at the calendar and go, all right, here's when maybe we can say that a period of volatility, if it's just short-lived, could be over? I mean, because we probably do describe this as some period of volatility, even though it's reduced, compared to the prior, like 4 or 5 months, this is a little choppier water.
Yeah. So if you look at the term structure in NVIDIA earnings or NVIDIA vol surface, it's really not that crazy. We have earnings coming up on the 19th, and it's really nothing sticking out of the ordinary as far as I can see. Of course, it's super important. And if it ends up being an outlier move to the down, of course, it's going to hurt the market. But is it more than average? Not really. If you look at where skew is in terms of names, skew has come down. In other words, the relative value of calls relative to puts, 25 delta, give or take, that's come in across the board on a lot of things, exception being AVGO and NVIDIA. Both of those call skews are still pretty big, and both of those earnings are still coming up. So that is what the market's looking forward to. And of course, there's no macro data. But if we get a resumption of the government, a lot of that liquidity might come back into the marketplace, and we can kind of resume business as usual.
I'm looking at the chart for NVIDIA right now, and it does kind of look like it's sort of on a level of support to some degree, like the semiconductors are, where you hope it firms up there. When you think about potential downside, if it were to manifest, Noel, what kind of for the vol range do you think would be maybe within the realm of expectations? Like, last time around, when we had a little bit of selling, if you go back to April, right, that was pretty intense for a moment there. VIX got up to 60. That's a pretty monster move. Even in the kind of first round of volatility last month, VIX to 28. So where do you think we should kind of set our expectations, say within the next, between now and NVIDIA earnings? Where should we kind of expect that range of VIX to trade in?
Under 20. I don't see a reason for it to shoot up over there. If you look at the tariff news, Liberation Day, that is a systemic situation. Correlation got bid, volatility got bid.
Yeah.
It was a sea change of information. NVIDIA, even with its reflexive nature, if say they miss earnings by some percentage, and the stock's down 10%, fully in range. That's not that crazy. Do I think that VIX goes to 50 with NVIDIA, down 10%? No way.
Okay. All right. That's fair. I mean, NVIDIA would have to be down. Yeah, to your point. You'd have to have a major crash, to create that sort of, to your point, high correlation event. That was such a big macro moment. I do wonder if maybe then that lends some credence to thinking about this Supreme Court decision about the Trump tariffs. Look, it hurts my brain, Noel, to try and think about the logic of how to consider this, because here's what I would say. April, when this happened and tariffs went on, as stocks sold off, the dollar sold off hard too. But then, of course, stocks came back. So, it's like on net, has the market told us it likes tariffs? Because we're way up since April and before April, and we kept making highs. So if the market has been up since then maybe the market likes tariffs, which means if the Supreme Court says no Trump tariffs, then the market doesn't like that. Am I crazy? Because look, I know that it still led to this huge volatility pop, but it's hard for me to say tariffs equal bad for market when the market's been crushing it during tariffs.
So let's address that kind of point by point.
Yeah, and I'm going to bring up the Kalshi rate for it right now too.
Sure, we're looking at tariffs, and we're looking at what do tariffs mean for the marketplace. And you're saying, well, if are tariffs good or are tariffs bad? Tariffs were bad, and now things are fine. Yet again, going back to the vol markets, if you are a student of the vol market or a practitioner of the vol markets, you would have seen volatility rise. Prior to that, you probably would have been out of the marketplace prior to that. And that's almost exactly the point of my business model, which is to say that volatility is one of the singular asset classes that is a forward-looking thing that can accurately allow you to predict market drawdowns, or at least within some level of tolerances. And that's exactly why we do this. It's exactly why the idea that you might miss a big up, like we missed a big up in Trump election. in the sense that volatility was elevated. It stayed elevated going into the Trump election. We had a big rally, and we were risk off, so we didn't enjoy any of that. But by that same token, we didn't get punished by the tariffs because volatility was also elevated going into that time period, and we were able to avoid all of those mistakes. So a lot of the cues that you are looking for, which is to make sense of some of this macro news, really does manifest in the vol markets, which is why I've devoted my business to that.
Very interesting. So you're saying basically you can't figure this stuff out or time to kind of know where it's going to come. So you have to have some kind of, but of course the great challenge is how do you engage in volatility as an asset class without bleeding out, right? That's kind of the main, when I talk with people who are small hedge fund managers or run family offices or they're advisors and they're trying to employ option strategies, a lot of them are bleeding out. I talked to a guy a couple of weeks ago. I mean, he was getting hit by the market already, but when he was walking me through where he was losing edge, he was losing 4 to 5% in his options strategy, which is like literally doing the opposite, right? And I think a lot of people get in that trap where they go, okay, I want to try and have some protection on, but I either bleed out because I'm not good at trading options, or I just go and pay like a buffer fund to it, or as like a blunt instrument version.
Those are all different things. If you look at the Gamma Index, which is a rough proxy for what is a hedged at the money equity straddle going to do, it's been going down for months.
Okay.
And that product
how do you track that, Noel? Where's what would I, maybe not for now, but like how would I track that? Who manages that data?
It's a ticker. It's a ticker. Just go on to TradingView and put in GAMMA. Poof, there you go.
GAMMA, Gamma. Okay, wow, nice. Love it. Learning something new. Fantastic. Okay, so all right, hold that thought for a sec. So come back for a moment. I pulled this up on Kalshi before I start switching to my screen. Supreme Court rule in favor of Trump's tariffs is obviously going down. So to your point, okay, we've got this kind of like macro, that you can't time it, but it's here basically in this moment. So then how did that connect with your strategy, Noel, when you're kind of thinking about being able to surf, a buffer fund doesn't really surf, right? It's fixed. What you want to be able to do is kind of surf with the waves of volatility. So tell me how you're surfing right now. What kind of trades make sense?
So I have some downside exposure to Bitcoin via MSTZ options, which is to say that I think that if MSTR gets punished, MSTZ will get punished more. But I don't really have a high conviction on that, so I'm just long some calls.
Okay.
We are in the market. We are long risk, which is to say we have, alpha and beta exposure. We don't think that correlation dispersion right now is a good location. The trade's been working, kind of like what you were saying earlier, which is, other people who's been getting punished by Gamma. Well, the other side of that is being short that Gamma and also long single name vol. That trade's been working for a really long time, which is to say short vol in the index and long vol in the single names.
Okay.
Trade continues to work. And that is reverberated by what you're saying from your earlier manager. So, those types of trades are things that we do, and kind of steady as she goes. It's been working for the correct reasons.
I found the Gamma Index is on Cboe here. Right now, 408. Does that sound right? Am I looking at the right thing?
Yeah, let's take a look.
Right, I got it up right now. Does 408 sound like the right figure, Noel?
No, not exactly, but not too wildly off. 361.
361, actually. There you go. Yeah, sorry, I was looking at the chart. Yeah, 361. Bingo. All right, so we got it. So what's that tell us? What are we looking at?
It tells you that holding a bunch of Gamma at the money sucks and it loses money and you bleed out. And what you do is if you go out there and buy a bunch of options, you're going to get wrecked. That's what it tells you. It doesn't mean you're going to get wrecked. That means you have been getting wrecked. Of course, market could crash tomorrow and you can make a bunch of money. It's a different trade.
Yeah. Okay. So, all right. You have a little bit of downside exposure through the Bitcoin and MicroStrategy. Let me come back to that because I'm obviously I'm interested in that. So tell me about the idea behind that, because I think one of the main questions is, does the crypto weakness right now translate into stock market weakness? And that kind of depends on whether or not you think the two are still connected, how well Bitcoin works as an indicator of risk. I generally think it still does, but tell me your thoughts on it, Noel. Here's a chart.
I don't know. Yeah, I know. I don't know is the real answer. Can I pull up a chart and see a 3x QQQ look substantially similar to Bitcoin? Yeah, sure, right? Does that mean I'm going to go out and put my IRA on that? No, not at all. So I can pull up something that looks to be substantially similar, but not really all that similar. So I do think that there's risk in it. I do think that risk can be reflexive, but hold on. But that doesn't mean that I'm going to put a whole lot of faith in it. My MSTZ call, and shout out to Mark Sebastian from Option Pick, because he's the one that gave me that idea.
MSTZ?
All I really
MSTZ
did is
up 13% today to 830.
Yeah, again, shout out to the guy who gave me the idea. The idea that was that the vol in that thing is going to inflect at a second derivative rate, which is to say, if it does work at all, it's going to work more swiftly than the market was presently pricing it. That was the real trade. It's not really an opinion on does MSTR go down or does Bitcoin go down. It's more saying that I think that volatility is underpriced. That I felt like it was a more sensible trade than Bitcoin goes down, drags NVIDIA with it, drags the Qs with it, and the market dies. I don't have any real opinion on that.
Okay. I do think that you've pretty much said, that's how it should work, though, right? I mean, like, I don't think anything's really changed so much. I think that if you want to express risk off, you can pretty much do it through crypto still, That's kind of, and you get the juiciest part of it, you know what I mean? It's like, and with MicroStrategy levered, that's now become an even riskier asset than Bitcoin. That's kind of been my main point of it. And I actually think it contributed to some of Bitcoin's reduced volatility a bit over the last 8 months, because people were able to trade MicroStrategy as the pure risk. And so Bitcoin kind of offshored some of that risk inherent to it, because you could get a levered version of it now. So, but if MicroStrategy starts really going into, tornado downspin, Bitcoin's going to come along. But right now it's moving a little slower. So the whole kind of long Bitcoin short master trade seems pretty good, which I think to your point fits with your market view.
Yeah. Also, one thing I heard, and I don't know if this is true, so don't take this as a source of gospel, that because of the shutdown, a lot of the ETFs that normally would take longer to get approved are getting approved. So we're going to have a lot more of these things on the marketplace for us to trade shortly.
Yeah,
we'll see.
True. Hey, Noel, great stuff, man. Great stuff. I got to jump. Pete Najarian just is in here, so we got to keep it going. Yeah, you the man, Noel. Really great conversation. Love the way you weaved in the crypto stuff into the volatility analysis. Now we got the Gamma Index to watch too. Cool. Don't get stuck owning options. People bleeding out. All right, let's get Pete in here. I know that he knows plenty about that. Mr. Najarian, how are you, sir?
I'm doing great. It's great to be with you, Oliver. And thanks, Noel, for the shout out. Appreciate it, brother.
100%. Am I right when I talk about how most people lose on options? I don't know if you were on when I was talking about a hedge fund friend of mine who basically, he goes long short. He was kind of wrong on the overall market, but the worst part about it is that he lost more than he needed to because of the way he was losing money on options.
Yeah, and you've got to be very careful. I mean, one of the things that we talk about all the time, Oliver, and you know this, you've been around John and myself for a very long time, and
yeah,
we love having you as a guy who covers this stuff. But the reality is, the education level of understanding options and what your risks really are. And I think even people that are outstanding and pros and everything else can make mistakes at times where they leverage themselves into a position where they actually aren't really doing the things that are disciplined things that you need to do when you're looking at these options. I heard you guys talk about the volatility index. I will say this, isn't it interesting how we pop up to 20 and we cannot sustain above 20? We've popped up there the last couple of weeks. We hit 20, we pull back. We hit 20, we pull back. So I think that's a little bit of a sign of, hey, look, there's some nervousness out there, but it's still just nervousness. It's not scared right now. And I think that's a big point on what we're seeing right now within the markets themselves.
I agree. Noel even said he expects the regime for vol to stay under 20. Do you agree with that?
I do. I think that there's always that possibility. We never know what the news could be that could get this thing up above 20 that could be sustainable. But as of right now, with the news that we've got, I would say that, yeah, this is a situation where it pops up there and then suddenly we see the selling come in and that pulls that volatility back onto the levels of as low as 16 or 17. But we've been hovering around 18, so why don't we middle it and just say 18 is about the new volatility where it was 16 or 17 at the early parts of this past month in October. So interesting to see how volatility is moving. Yeah, I think it's a fair level.
It's a trade a lot of people will make. Happy to, maybe to slow down some of the extremes of the froth, Like that never hurts to just take a little bit off the top.
Yeah, no, I think you're exactly right. And that is part of the discipline that goes along with trading options. It's It's why people that are trading options have got to be disciplined. You've got a little bit more leeway when you're trading stocks, but I think when you're in the options world, you're at the Cboe, you understand it. I mean, when you're in the options world, there are a lot more risks that come with that, and you've just got to understand
That's
that.
the reason there's edge, by the way, as you know,
That's
right?
right.
That's what's great. If you got to learn something, that means there could be edge there, right? You go sit down, poker table you never played before, you're going to get smoked if you're anywhere, worth playing. So,
Yes.
With the risks comes the edge, obviously. And I think that for a lot of people, they bleed out because for some of them, it actually makes sense. If they've got a ton of stock and they just got this massive nest egg, let's say you've been working for NVIDIA or one of these big tech companies. This is a very real thing. These people got to protect their wealth, and it's very concentrated. So for them, if they want to do something that's just very simple, either sell call or even just buy puts, if they bleed out, they don't mind, right? Because what's to them is they just got to have that baseline. That's why some people just go, just give me the buffer fund or whatever. I don't need anything fancy.
Right. Well, and if
But you and I, that's not how we're going to trade.
Oh, we're not gonna. But there are times where I think it makes a heck of a lot of sense. You own an NVIDIA, for instance, and you've got a nice position in there. You've had a big run to the upside. I don't see anything wrong with doing something where you do buy a downside put for a little bit of protection. Maybe you sell an upside call to be able to give yourself a little less cost when it comes to that put that you're buying. And if it's to the upside, they'll probably hit that volatility as it's going to the upside, and then you just have to make a decision, when do you want to buy back what you sold. So there's a lot of different ways that I think you can move around and put yourself into different positions in the market that we're in right now. By the way, we were talking about NVIDIA. It's pretty interesting.
I got it up right now. We're looking at the chart, 190.
Yeah, and we've had a pretty big option trade not too many minutes ago, really, quite frankly, today, where they're moving out of November, they're moving out to December, they're moving from the 195s, they're going up to the 220s. Somebody out there has gotten a little bit bullish. They're taking off a profitable trade already, and they're looking for even more into the future, all the way out to December, though. So things can happen a lot with this whole month of November, but as they get closer and closer to December, they're looking for some positives that's going to get it to the upside. Maybe that's going to be earnings itself. I don't know. Earnings are on the 29th, so this roll that we are seeing going on today, that's somebody who's taking a little bit of that risk off, and they still want to be in NVIDIA for the long term, so they're out there to December.
Yeah, I'm with that. I think that makes sense, frankly. I had a conversation with my brother a couple of weeks ago, and he, as the market was kind of starting to get hit, and we were talking about it, and I said, look, if you want to be in the market, it's basically, you can get kind of the semis offer this really nice sweet spot between beta, because they are moving more than the market, but then they're also directly in the best earnings quartile as well. So it's like, you kind of get like your core equity portfolio in a way that I think is symptomatic of this very concentrated style of market we're getting with AI. But it works, right? It makes some sense, because even though you get beta with it, these are the companies that are really changing the world.
Yeah. Oh, absolutely. And it's interesting. I was just flying down here to South Carolina, where I am right now, with a gentleman who was coming down here to check out the nuclear plants. I mean, that's a big part of it. And we had a long discussion as we were flying, because I think he'd be a smart guy to ask. So I sat next to this gentleman, and we had a great time talking about, hey, what is it really like? What is it in the energy world? What does this look like? And he was saying, hey, look, the demand is there. The data centers are demanding that much more. AI is demanding that much more. It's very, very big, but you can only get those things going in a certain pace, and it takes some time. It takes plenty of time. So this is something that I think is going to play out for a much longer period of time than a lot of people are projecting right now, because if you're going to build these nuclear energy spots, I mean, we're talking about, well, they'll say it's 5 years, it's going to cost X. Well, the reality is it takes closer to 8 or 10 years, and it's going to cost 3X. So I think people just have to understand that with this demand, it's very difficult to keep up with that demand. And I think that's something that people really have to understand much better.
Okay. Pete, that's well said. I got AMD up right now, and your brother did point out when we had him on earlier this week that there was some put buying down there. Day after, it looked good. It looked like we were going to ramp, but now those put buyers are looking like they're the ones getting paid. Are you watching this?
Yeah, those put buyers did pretty well with that stock. It immediately was down, about 5% the other day when they came out with their earnings and so forth.
Okay, that's right. They did the U-turn.
Yeah, and it did that U-turn. And I'll tell you, it was interesting because it made a lot of sense to me why it made the U-turn. I actually didn't understand where it was coming from, that the stock was going down. But nonetheless, with those put buyers, if they reacted the way they needed to early enough, they could come away with a pretty decent amount of money on that one. And look at this follow through that we're having. So I think it's a pretty interesting thing to just kind of keep an eye. I think the options world continues to be very strong. I was just in front of a bunch of people from Clemson University talking about, hey, look, there's a lot going on in this world, but if you want to really be in the power world, it's where Oliver's is right now at the Cboe, because options are absolutely incredible. I mean, the fact that when I got in the business, there were 750,000 per day, and now we're at 64 million a day. I think that gives you a little bit of an idea of where the true growth is right now in the trading world, and it's absolutely options.
Absolutely. Amen. So that's true. When looking at the chart for AMD, the general pullback, so the put buyers are getting paid. Here's what I'll say is the catch to it all for the semi stuff is that if it ever breaks, then, market's going to get hammered. There's not a lot else we got going for us in terms of earnings growth right now. And people will argue, that there's signs of weakness in the economy for jobs. But guess what? We don't know if they don't print any numbers. So
right.
That's the other thing. We were kind of debating earlier whether or not the Supreme Court stuff is weighing in on this at all, because look, call me crazy, Pete, but I was saying the stocks are up a ton since we started tariffs, so I don't know. That's supposed to mean tariffs are bad? It seems like the stock market maybe said tariffs are good, and now if we're going to try and shoot them down or whatever, then maybe the market doesn't like that. I'm just trying to follow the logic here. Seriously, it's wild to me.
No, I think you're right. I mean, that's exactly what you're looking at. I mean, you just take a look at the charts themselves, and it speaks for exactly what you're talking about right now. How about
the market exploded at first, but then months later, we're still up a ton. So apparently, even if it's AI, it means we could afford to maybe push people around. I don't know. I don't have the explanation. I'm not the political scientist, but the market's up a bunch since tariffs.
Yeah. Oh gosh, I mean, not just a huge bunch. Just absolutely an amazing run to the upside. And the one thing I'd push back on you a little bit would be it's not just the tech side of earnings, though. I mean, the earnings themselves have been absolutely extraordinary just about everywhere you look. I mean, it's been incredible to me. And I think a lot of the reason that you and I would understand better than a lot of people is we're willing to be boots on the ground. We go places, we see things, and we actually take that information into our heads. Because I can tell you this, how many times have I gone, for instance, to a Walmart and seen us absolutely packed with cars, an incredible amount. And I'm seeing that more and more and more with restaurants and everything else. So, there's a lot of things out there that are telling us all the negatives, but I'm seeing a heck of a lot of positives, which is why I think we were hitting these record highs almost every single week, almost every single day. It's been extraordinary, to be honest.
It's been extraordinary.
Yeah.
It's been extraordinary. Pete, before we in the first 15 episodes, you and I left our Kalshi conversation, I think, with the government shutdown. I was wrong on that one. I don't know if you remember, but I was like, this thing's not going to last more than a couple of weeks. I got smoked on that. But, we haven't run hold on, we got to run Gamble real quick before we go to the Kalshi.
Well, there it is.
There it is. We're back, baby. We're so back. All right. So, government shutdown now. We are at... we're going to 40 days, basically, right? And the chart keeps going up. I'm looking at it here on Kalshi. How long will the government shutdown last? It's like it just keeps going up and to the right, Pete, like it's never going to end.
Yeah, that's it's disappointing. Obviously, it's very difficult for a lot of people out there right now. I was talking to people at the airport yesterday when I was taking off, and they're still coming to work. And I will say this: overrated is the fact that all these airports are supposedly everything is delayed and all this. I don't believe it, and I've been flying a lot in the last couple of weeks, which actually encompasses what we've been as far as how long this shutdown has been. And I can tell you this: Oliver, the amazing thing is, things are going smooth at every airport I've been. I've been in LAX. I've been in Minneapolis, St. Paul. I've been in Florida. I've been in South Carolina right now. And everywhere that I've been, I'll tell you what, it's been smooth as silk. So
the travel's smooth. The travel's certainly smooth. But no, to your point, there's got to be some ramifications. I'm looking at text for somebody I know said, look, our link didn't come through for Snap. So there's got to be real impact at some point.
Yes.
So you would think they want to get it, It's just we got to have something functioning, even if they hate each other. Just go hate each other in the in the office. Just go do it in the office. Like, maybe you don't need to push anything, whatever. But look, I mean, the bet at this point is, let's talk about the trading it real quick, Pete. Is, how do we trade this idea? Do you put it on the 50 and flip the coin? There's not much edge, it doesn't seem like at this point. 48, 46. So what? I'm just going to play blackjack on this.
I think, unfortunately, that's what you're stuck with, right? I mean, there's not a whole lot of choice here. I mean, the idea of what this is going to be and how much longer it's going to go. And I agree with you, Oliver. I mean, it's a difficult call. I don't think any of us, not only did we not want it to go this long, but we didn't expect it to go quite this long. And that's I think, what the problem is right now. And it's frustrating for all of us. It's really frustrating for the people that aren't getting the daggone checks. And they're pretty ticked right now. I mean, they still have a smile on their face, all these workers, but you know what? They're not very happy about how things are getting handled. And that's something that I don't care if it's a Republican side or the Democratic side. They need to get together to at least get something rolling, and they haven't been able to do that. They've got to do that, or else I would just say the heck with all of them. I mean, let's change this thing up a little bit. This is awful.
Pete, it's an interesting point. The last thing I'll say that's just pseudo-political, but I'm just trying to, again, follow the logic and be fair, which is, there was originally this whole notion that they were going to fire all these federal employees, right? And then generally kind of some of the DOE stuff was like, debatable how many ended up getting fired. Like, did they hit those quotas? Like, when we have Vivek Ramaswamy on, they were throwing out crazy numbers of the percent that they wanted to get down to. I'm pretty sure they didn't. So now if the government shutdown is getting to a point where it's effectively like you did lay off people, then maybe the market doesn't like that. That's a point where the market we thought maybe we were going to get away from big federal layoffs, but maybe we're not, and that could be a bit of a, an egg on the administration. Last thought?
Absolutely. I think you're right when you say that, and I think it's unfortunate that we're sitting in this position today having to talk about this at all, but it's obviously something that's going to affect the markets, and I think it's already having some ramifications already in the economy, but hopefully these guys can finally get themselves together. They act so pompously, regardless of who it is, and I think what we need to have is somebody's got to actually give a little something, and if they can get a little bit of that going on, maybe we've got a chance. But it's awfully frustrating for a lot of people right now that are having to deal with all these headaches and not getting the checks that they need to have. That's really unfortunate, and that's something that we need to get fixed.
Yeah, everybody's got to give something, right? That's like a Rolling Stones song, I think, or something. Market just blow up, or what are they watching? What are they watching behind me? What sport is on? So who's trading what? They're exploding back there.
Yeah, they are. I don't know what they're
looking at. I don't know what they're looking at. What are they looking at? Was the market's not doing anything? They must be watching some game they're watching, Pete. You're the sports guy, Pete. What are they watching? What game is on right now?
Hey, man, all the games that I know over.
What game is it?
In a minute.
I know it's nothing, but what game is it? It's a joke. They're just screwing around. It's some. All right, Pete, you're the man.
The floor.
Exactly right. I'm like, come on. There's no game on. All right, so next time we'll bet some sports. Good stuff on the politics. Nice job, Pete. Pleasure to have you, sir. I got to do a few things here manually. One, which is run bada bing, the Cboe exchange traded profile. We're going to be talking some of the really good ETFs that are listed here. Today, that's going to be with a little bit of a crypto tilt to it. Mr. Kevin Kelly from Kelly Intelligence is on the Zoom. Oh, we got Pete still. Hold on, I got it. Watch me work, baby. Watch me work. Okay. There he is, Mr. Kevin Kelly. What's up, my dude?
Hey, you know what? I think everyone was excited on the floor about, these ETFs we're going to talk about.
Yeah, exactly. They heard, that's exactly what they heard. These are the guys that are, trading to make sure that your ETFs are running smooth. You guys launched Biddy and Baggy, which were really kind of the stalwarts of the income-driven crypto funds. As crypto's getting a hit right now, tell me what the holders of those funds are experiencing.
Well, yeah, I mean, there's definitely been a downdraft, and we've actually seen the net asset values come down, and that's just because we have exposure to Bitcoin. But what's happened is we've actually seen increased volatility, so that's good for strategies like ours, where we write against the volatility. Right, the whole premise of what we're trying to do with our suite is to monetize volatility while having long-term exposure to the asset class. Like, our strategies aren't meant to be traded, because what we do is we actually own exposure to the asset class, and then we sell volatility against it every single week. And so what we want to do is we want to serve a portion in the portfolio to generate high amounts of income. So Biddy, for example, pays out 2% a month. We've got Eddy, which is ETTY, which pays 3% for 3% for Ethereum. And then we just launched on Tuesday our Solana one, which pays 3% monthly as well. And so, these are meant to be long-term holds. You want exposure to the asset class. People should have exposure within, their portfolios to digital assets because they're technology networks. And so we've seen technology networks, from their infancy in the 80s to now perform well over the long run. So that's the purpose.
Who are you finding most right now likes the idea of the income version of crypto? Is it folks who are trying to use equities to do the same thing, to fill the bond side of the 60-40 that they think needs something different? Because if you really just love the tech, then you're probably going and just buying the tech. I feel like this is more kind of a kind of an advisor kind of checkbox they can mark maybe a few at the same time.
Yeah, what we're actually seeing is you're seeing a lot of RIAs come into the space. You're seeing a lot of institutional investors.
They can check the income box, they can check the crypto box.
Yes, because what they do is they have income portfolios, but those income portfolios haven't been delivering a high amount of income, which these do provide a high amount of income. So it actually increases their income. And if you have it into a blended portfolio, you're not taking outsized risk, right? Because you're going to take 2, 3, 4, 5% positions in these, yet increase your income levels. And so that's where we're seeing a lot of attribution in this, especially because they know they're going to own this over the long term, right? Like they're not going to own it for, 6 months to a year. They want this space to grow. And so another thing we're actually starting to see some attribution in is people that own crypto, but have owned crypto and staked. So staking rates have come down on Solana. Staking rates have come down on Ethereum, and those typically have lockups. So what's nice is that we're an alternative to having crypto and then staking them. So that's the nice aspect as well. So we're actually seeing two attributions. We're seeing investors who are crypto native that see this as an alternative where they can have 80% to the spot underlying and 20% to us to generate income that they were going to stake anyways. Or you're going to see income-focused investors, because if you look at Biddy, for example, Bitcoin, right? You
2%
don't have
monthly option income ETF, I'm on it.
Yep, you don't have sovereign risk. You don't have corporate risk, right? There's no issuer. So the nice aspect is you don't actually have to worry about, some of the things with companies where if they miss earnings or if a CEO gets ousted. So that's the nice aspect here.
You don't have the idiosyncratic risk.
Yeah,
I like that.
You're removing a lot of. Yeah.
For the Solana then, right? Because you guys just did this for Solana. I mean, let's say you are an advisor, right? How do I figure out should I do this income approach through Solana or Bitcoin? Is it just that if I want a little bit more and I want to accept a little bit more volatility, I go for like the Solana? Is it like a beta thing, or how do you think about it?
Yeah, it's a diversification risk if you're doing it blended with like a Biddy or you're doing it with Eddy, ETTY. But holistically, the way you're thinking about it is Bitcoin is actually digital capital, while you look at Ethereum and you look at Solana as digital infrastructure. We're building out the rails for financial institutions globally now, right? So I'll give you an example. Western Union is almost 175 years old. They've got they're operating in over 200 countries. They are building, so they don't get Kodak'd, they are building their next generation of remittances on the Solana network, right? So why are they doing that? Well, if I was going to send money overseas, it'll take days to settle. There's a lot of high fees and costs. Well, how do you remove that? Well, one way you remove that is you build it on a digital infrastructure network like Solana, and you have they're having their own token, their own stable coin using Solana. And what you can do is you can get instant settlement, you can reduce costs. And so it's really reducing a lot of slippage and friction within the financial infrastructure that's in place today. So they're hoping to have
That's a good Solana pitch. It's a good Solana pitch. I just think if
well,
I'm an advisor, I probably don't even care about all that. I'm probably just going, what's my income and what's my range of outcomes, you know? So in terms of the range of outcomes, I think a few things that kind of have been pointed out, but maybe are worth pointing out, is that some of the income stuff has come under some criticism, and that the way the yield is described, people are expecting that to be a different form of return. Do you want to talk about that for a second, Kevin? Just because people look at a yield and then they'll look at an SEC yield and they'll go, okay, all right, how do we explain the difference? Basically, what's the key thing people need to know to realize, hey, this is not like a capital return?
So the way you classify returns is return of capital, and that's just an accounting mechanism. So what you want to do is you want to look at a strategy and see if it's destructive, right? Are they actually returning your capital to you, or are they growing their NAV? We generate our returns, our yield, through options premium, right? We're monetizing volatility. And so with that being said,
mostly through the selling of options and spreads, right?
Yes, exactly. We're selling options against the underlying. We're doing it every week. We're doing it out of the money. So we want to give as much upside as humanly possible to track the spot. But at the same time, it's going to get capped a little bit, but we're trying to target 5 to 10% out of the money every single week, collect those options premium, and then every month pay out that to shareholders at the end of the month. So return of capital is a classification under the accounting rules. And so we're not actually returning capital, your own capital to you. It's just the way it's accounted for under GAAP principles for the actual funds.
Got it. And that's where, again, I just see this really as an advisor-driven product. I see it as a version of what people are doing in all kinds of different custom option strategies and SMAs and overlays. It is the whole idea of just complementing or replacing to some extent the function of bonds. Like it's structured to provide that income. That's the kind of continuous rate, the predictability of it, and you're just saying, hey, we've got a new asset class that can provide this for you, and that's crypto. It's high beta stocks too, right? All the yield max stuff, et cetera. So it's this is the hot ETF spot.
Yeah, and just in that vein, I mean, you're actually seeing it on the corporate side because MicroStrategy has, which you previously discussed, is coming out with fixed income products to the marketplace that have higher yields as well, backed by their Bitcoin, right? Yeah. And the way we like to think about it is that we're low volatility, low beta versions to the spot. And so, we're not levered. It's 1-to-1. That's why advisors, this is a great tool for advisors to look at to implement for higher amounts of income in the portfolios, because we are unlevered. Right. And exactly what we're doing. We're systematic, and we have a methodology behind on how we write the options. And it's important because there's not a lot of great places to get income. And so if you know what you're getting into and the exposure you want, this fits in a great bucket on a fixed income alternative, especially against
I think that the competition that is arguing is all the alternatives, the kind of whole private market. It says, okay, we've got a solution too for bonds. It's diversification through these private assets. Kevin, when we're thinking about options, real quick though, is for these funds, okay? So what's the pain point then? Because to the point of where we began, which is Bitcoin down right now in price, up in volatility. The up in volatility part means you can harvest more because the premium you're getting from the options you're selling is higher. So this is not a bad situation. What would be the bad situation? It is a hypothetical in which price goes down and somehow like vol goes down? Because I don't really see that as a thing that happens. It happens in the stock market sometimes, right? You'll have instances where VIX and S&P are not inversely correlated.
Yeah, I think one of the things to take away is that in any option writing strategy, you don't want that quick whipsaws back and forth, back and forth, back and forth. And so I think that is really the pain point, because if you're selling options and you sell them when they're down and then it goes back up, and then you sell them when they're back up and it goes back down, that always Yes, exactly. I think that's the biggest pain point. And we're not really seeing that because the asset class has matured. So it's not like you're in a small cap stock that can whipsaw around pretty frequently on a daily basis, up, down, up, down, up, down, especially because institutional flows. And I would also like to point out that volatility can go up when the underlying asset class goes up. And we've actually seen that in Bitcoin. Yeah. So we saw that at the end of September. So, these are asset
stocks.
classes.
People watching it actually happens more often in stocks now. Stocks up, vol up, because everybody's buying all the options and the calls.
Exactly. So the biggest concern that advisors have is, well, what if vol goes down, right? And how are we going to generate? Well, the one way to think about this is because these are emerging technology networks that are still in the life cycle of what they do, still newer, right? I mean, Bitcoin was created, back in 2009. We've seen volatility stay between 40 and 80, and it kind of trades, and vol goes up and down within that range. It has.
Right, so you generally know what to expect.
Yeah, exactly, and that's analogous to a Tesla, right? So for Bitcoin in general, I would just say that it's comparable to the Mag 7 names. Like one of the things that advisors have actually taken on to is that if you want to turn your Mag 7 into the beautiful 8, you can add Bitcoin exposure via Biddy and Baggy because it has a similar historical volatility profile.
Nice. And you've done a good job kind of weaving some of the crypto bull case in there. The other thing, too, that I was talking about at the top of the show is that I think Bitcoin offshored some of its volatility components to MicroStrategy since it's a levered version of it. And, even me as kind of still the lingering Bitcoin cynic with my bearish divergence that I talked about ad infinitum, by nature, even though that's a bearish thing, it's one that first involves a compression of volatility. So even it all adds up, right? Even from the bearish side, it kind of fits in. Kevin, you demand great conversation as always. Thank you very much for bringing us the details on the funds and of jumping on. You demand.
Thanks so much, Oliver.
You got it. Appreciate it, man. All right. Look, we're 2:53, 7 minutes into the ballot. I feel like we're rocking right now. I got Charlie Moon standing by, joining us from Prosper. Kevin Kelly, great there. Beautiful smile hanging for us because he knows I got to switch over. Hey, you know what? I still got those pants from Vegas, Kevin.
You could put in the flying eagle with the football again. If
did you like that one?
Yeah, that's amazing. Yeah,
the gamble.
That was great.
So when we were actually with the Cboe team. I'll tell a funny story here since this is the streaming world now, because I'm producing it from my desk, Kevin. So it feels like I'm kind of like, an in-between of the streamer guys online, the young kids I'm trying to catch up with. We were in Vegas for the Robinhood conference with Cboe. Jack wasn't there, but Jared was, Matt.
Yeah.
And we went to the Bellagio, the restaurant in there, one of my favorite spots, kind of a little hidden spot. And they wouldn't let me in because I had shorts on. And so they had some leftover dancer pants from the show, and so they gave me the dancer pants. And Kevin Kelly was the man who facilitated it all.
And the dancer pants, by the way, was from a former dancer named Twinkle Toes, and it fit.
Stop! No, that's not part of the detail. You made that. All right,
I made that up.
Actually, I don't know. You tell me. You were the one that negotiated the situation.
I did. I negotiated. I paid cold hard fiat currency. I paid USD.
Yeah. No crypto there. See, that's some salon I don't do. Boom. Then we got Charles Moon right on time. Charlie, how you doing, sir?
Doing great, Oliver. How's it going?
We're having fun here. Market's got 5 minutes left. Where are we at right now? 67.20. So VIX 20 is basically, it's been the spot. Noel told us at the top of the show is going to stay under 20 today and maybe for the foreseeable future. What do you think about that?
You know what? It's possible. It was a simple tweet that sent us down, and the market had no bounce. So we're going right back to looking pretty darn weak. Now, we've officially filled this little gap, this crazy run-up that we had just a couple of weeks ago. But, when we kind of see like the near-term picture, when we see how earnings has been in relation to like a lot of the growth stocks, a lot of the AI stocks, it hasn't been good. The response overnight, it hasn't been good. So we saw a big snapback yesterday. There was great follow-through, and today it looked like there was going to be a little bit more follow-through. And as soon as the opening bell hit, it looked like someone just hold the floor, and we've been just going down since.
So do you worry then that maybe we need a bigger VIX pop to flush things out? It seems like you think the momentum maybe is not looking great. Am I hearing
think
you right?
I think that right now the story is about earnings. It's more about earnings just kind of have a devastating effect on growth. Maybe it's the sign of the times. Maybe it's the sign of the economy. DoorDash, getting absolutely slapped today. Maybe people are sick of paying
I missed that.
$27.
Well, Upstart got hit really hard yesterday. That was a really good observation yesterday from Danny Kirsch at Piper Sandler. He was talking about some of the credit cracks, and I missed that one. I haven't been super into the single stock stuff. So DoorDash, hey, don't blame me on DoorDash, okay? I'm customer number one.
Well, what's another telling
Sadly.
sign is, look, if you look at CarMax today, CarMax is down a tremendous amount.
Okay.
There's been a lot of reports that there's been more repos, more defaults on on auto loans, and the CarMax kind of guidance just reflected that sales are down because rates are obviously a lot more higher and it's a lot more expensive to buy used vehicles. And more importantly, that obviously with the defaulting loans and obviously the credit crunch, Jamie Dimon kind of alluded to that the other day. You can see what kind of devastating effect it's had on that stock. That stock is just getting absolutely pummeled. And from my understanding,
CarMax down 6% today, right?
Yeah, I actually bought a car from CarMax, and what was telling was that the best rate that I could get was actually through their own in-house. They're not down 10%; they're down 25%, brother.
Ouch, man.
Yeah.
When I think about some of the, I guess core economic stuff. I guess regional banks, nobody's worried about those anymore. The regional banks are fine right now. That's one that used to be kind of one of those charts to look at, as a gauge when that was kind of the hot thing. But maybe it's going to be smaller consumer stuff where the, what hits the fan first. Is that kind of the thought?
Well,
Government shutdown too, right? Doesn't help people not getting incomes.
Yeah, I mean, we're going to see, because a lot of the froth is, again, we talked about this yesterday, it really isn't the Mag 7 names. It's been the AI growth story, and a lot of these growth stocks, that have gone, I don't want to say parabolic, but, they have hit, atmospheric levels that no one would have ever anticipated. Names like IREN and Cypher, which were Bitcoin miners, but now they're data center players. And I guess this also alludes to a name like Carvana, who's up, thousands and thousands of percent off of their lows, in the last 2 years. So if CarMax is going to get hit,
people were thinking Carvana was going to go bankrupt. So at this point, but look,
well, they might be right. They might be right.
That's right. So maybe maybe this is the version of the credit stuff we watch, which was kind of the lower end consumer. Maybe it's just a classic, very slow kind of moving, grind of the economy where, you're going to watch some of that lower end credit stuff kind of get slowly steamrolled, maybe is kind of the idea.
Yeah, 100%.
Doesn't sound pleasant. I'm not convinced of that, by the way, Charles, but.
One of the things that I alluded to yesterday was that I felt that the market would just be back in a really comfortable place once the government shutdown ends. And now I'm actually wondering if that's just going to be a momentary bump and we're just going to keep back to what we were doing, because this is starting to look, and I don't want to elude this, but this is kind of how the market started to look earlier this year when we had that absolute roll of around, was it 18-20% in the NASDAQ due to the trade war concerns.
April.
I just wonder if this is we're just a bit too frothy and a correction is in order. And usually when corrections are at absolute peak value, they tend to be a little bit more significant than they normally would be.
Charles, give me a way to play it, to trade it then real quick before we go, because bell just rang. What are we thinking for tomorrow? We got one more day. I mean, it should be an employment day, but I don't know, it's government shutdown. Like we're not getting anything, are we?
No, again, it's due to report, but I highly doubt it. None of the jobs data has come up. Quite honestly, I think that because of the extended drop, we're down 1.9% at the close here. I actually like these little kind of dead cat bounce plays. So being a zero DTE day where there's going to be retail traders, chasing after cheap premium, for me, it wouldn't surprise me if we see an absolute rebound. I think that rebound would be short-lived. It may not be frothy. I think it'll be a fast pop. If there's a lot of acceleration to the upside, I expect that same acceleration going into the close tomorrow. So I would say look for cheap upside play in the morning and then look to fade the rally in the afternoon.
All right, so a little rip and dip.
Oh, yeah.
A little jump squat. Something.
Yeah. It's exactly right,
Something
man.
like that. All right, good stuff, Charles. Appreciate you, man.
Appreciate you.
got you
Thanks
on.
for having me.
All right, buddy. Thank you, sir. All right, thank you for tuning in. That's it. Down day. Thanks for watching. Looking for my outro, but that's it, man. That was a good show. That was fun. Kind of like that. I don't want to be done. I can't let go. I'm in complete control. All right, thank you for tuning in. I will see you next week. We're going to get some good people here live again. So now that we got the tech down, I think we're pretty much ready to roll. If you're watching on Benzinga, thanks for tuning in. I'll see you guys in New York on Monday for the FinTech Con.